Here to talk more about the record-setting day on Wall Street and his stock picks is this week's market monitor, Eric Marshall, president and portfolio manager of Hodges Capital Management. It's a Dallas-based fund group that runs more than $2 billion. Welcome, Eric. Good to have you with us. How do you explain the market turnaround these past couple of weeks?
Well, I think it's really been a response to the commodity and some of the volatility that we've seen in currency markets and so forth. Just kind of settling down. We've gotten into earnings season, corporate earnings, and the outlooks that we're hearing from companies are relatively positive. And I think it's been a normal, one step back, two steps forward.
What's it like down there in Dallas, which is not really the epicenter of the energy world in Texas? I guess you'd say Houston is, but you're very close to it. A lot of the economy is dependent on it. What are people saying?
Well, in Dallas and in North Texas, we really haven't seen much of an impact of lower oil prices. And if you look at the Texas economy, it's much more diversified than it was back in the early 80s when we had the big oil bust. And so in Dallas, we haven't seen it. Anecdotally, you hear some things from Houston, but it hasn't had as big of an impact yet.
We were speaking a couple of weeks ago here internally that we wanted to have somebody on who follows small cap stocks, because we focused a lot on the blue chips. And here, lo and behold, we have you on a night when the Russell is at record high. Why make the case for small caps this year? And I suspect that one of the arguments is that they are less prone to be whipsawed by currency moves.
Yeah, at the Hodges funds, we don't get too caught up in the absolute level of any market index. But within small caps, you can always find secular growth opportunities in just about any type of market. And to your point, they are more domestic-centric, meaning that they have less foreign exchange exposure, they have more simplified capital structures. So I think it's really a good place for active portfolio management where you can get in there and do some individual stock picking.
Let's go through some of your individual stocks, beginning with Eagle Materials. You mentioned it last time you were here, about a year ago. What's been going on there? It's down a little since then.
Yeah, they're a manufacturer of cement and gypsum wallboard. Both of those are seeing very good demand, very good pricing power. The prices of both of those commodities have been rising as the housing market and construction market continues to improve in different areas of the country. And we really like the earnings profile of the company, their earnings power over the next couple years. They do have a segment of their business that's relatively small that does provide frac sand to the oil and gas industry. And as a result of that, that's the reason why the stock is down over the past year. But we really think you're really buying the long-term cement and gypsum wallboard business, and you're really getting the rest of that business for free at these price levels.
All right, so that's the reason it's been stuck in the mud there. Jarden Corporation trading now at $51 and change.
Yeah, and this is more of a mid-cap stock than a small-cap stock, but it's one that we like here. They do over $8 billion in revenues, and they're a consumer product company. They own brands like Coleman Camping Equipment, Rawlings Sporting Goods. They own Mr. Coffee. They bought Yankee Candle Company here about a year and a half ago, and they have a number of other brands, and they're seeing very good organic revenue growth in these areas, as well as some acquisition opportunities. The company throws off a lot of cash flow. They've been aggressively buying back their stock with that cash, and it only trades about 15 times forward earnings.
All right, quick thought on Swift Transportation, big trucker.
Yeah. This is another area. When you look at the trucking business, it hasn't been very good over the last 10 years. And they're starting to see pricing power with some of the long-haul truckers. And Swift is really well positioned to take advantage of that. They've started to raise prices for the first time in about 10 years. And we think with a lot of the driver shortages and lack of investment in this space, we think they're going to be very well positioned to take advantage of these trends over the next couple of years.
All right, Eric, thank you very much. Have a great weekend. We appreciate it.
Thanks, Tyler.
Eric Marshall with Hodges Capital Management.